But how do you invest in gold? Where do you go to buy your gold? Do you go and actually buy physical gold, buy some Krugerrands or some bars of gold? Perhaps. That's one way of investing in gold. That way of investing, though, does come with some risks, right? That is, you could lose it. This is the same reason why we kind of moved away from gold into paper money, centuries ago, is because if you need to pay for things, pay for goods overseas, for example, put it on a boat, there's the risk that the boat goes down, right? And you lose all that gold. It seemed to make sense that keep your gold in your vaults and issue paper that guarantees the note holder to a portion of that gold whenever they want to come and get it, for example. So there is that risk of holding gold. How do you hold it securely? Do you have to insure it, for example, which many people do. So yeah, holding gold, physical gold, is one way. Most investors, though, will hold gold in other more securitized forms. In particular, a lot of people seeking gold exposures will do so via derivatives. So different types of gold instruments like CFDs or gold futures that give you access to the performance of gold, the gold price. Gold goes up, your instruments go up in value as well. Usually it does this in a leveraged way. So, gold goes up 1%, your exposure might go up by 10% or more, for example, depending on the amount of leverage you have. Losses work the same way as well, same magnification. There's also a lot of gold ETFs out there, exchange traded funds. So these are pooled investments that have underlying gold as an underlying asset that you can invest in. Your exposure there is generally 1-for-1, not always, but yeah. So if gold goes up 1%, your ETF goes up by 1% in value. There are more indirect ways to get exposure to gold. There's a lot of interest in, for example, gold miners over the last year or so. Obviously, because they're mining the stuff, they're getting access to the physical gold before anybody else. And so if their mines are doing well and the gold price is going up, then their profits are going to go up. Your share price will go up, yeah? So that's one other way in which you can get access to gold. But yes, just like investors of old, explorers of old, the lure of gold is quite high, and its long-term value can be quite attractive. But with any investment out there, it's the price that matters. Right? Anything looks good on paper. Any investment can provide benefits, but if the price is too high, then perhaps it might be worth overlooking. So in the hunt for gold, especially if you're thinking about it as an investment, it's important to consider your investment objectives and how a gold investment might be appropriate or might not be appropriate.
Now, if you're a bit of a finance nerd like me, why don't you check out my Substack? There's a link in the description, and here you'll find additional concept notes, unedited videos, community chats, and much more. See you next time.